Welcome back, Alpha Hunters. Okay, so the week just closed for June the 10th, and what an amazing amount of selling that we saw come in towards the end of the day yesterday, and the gap down we saw today, and some continued selling towards the close today. So we're going to get into a little bit of that, and we're also going to get into what is kind of driving the market right now, because a lot of it's going to go back to what was driving the market a few weeks back, which was inflation. Now, next week we do have Fed coming up, so do expect to have some volatility in the marketplace around, especially on Wednesday. I would expect the market to be kind of quiet on Tuesday, but here on the SPY, we did have 3 days pretty chill, not much going on. We did have a gap down Tuesday, and we just kind of bought up the whole day, and then Wednesday was just kind of a sideways down day. Nothing that we hadn't seen in the previous week and a half. And then Thursday happened, okay? So I'm going to go into an intraday chart to a 15-minute. So we got rid of the MACD and RSI, so it looks a little bit better. But as we can see, we saw just a bunch of sideways action that kind of went on during the week. And another thing that was starting to be noticed is as the past week and a half kind of went on, we started just making lower highs on a lot of these type high moves. And then even on this week, we just started making really much more aggressive lower highs. And then Thursday, obviously, we've been just kind of watching this channel just around in this area. Once we broke through this support area, it really just took off and it didn't stop. So this is a 15-minute chart, right? And we just had 1, 2, 3, 4, 5, 6, 7, 8 candles in a row. It was pretty much the last 2 hours, just straight selling on Thursday. And all that was a little prelude to what the market was looking forward to, was the inflation data that was coming out Friday morning. And then we had a gap down on the inflation news, traded down pretty solid on the first hour, sideways most of the day, a lot of buying, a lot of selling just right here in the middle part of the day on this trend line again. We just kind of got right down to that trend line, started to bounce, and then the last 30 minutes just got hammered, and we closed pretty much at the low of the day. So what all that kind of says, it does not look good. I get that. We had 2 solid selling days on the market. We do have a massive open gap here between Thursday's close and Friday's open. So do expect some attempt on the market early next week, maybe even later next week, to push up and probably close this. But the way we closed today at the lows of the day, I would expect we go a little bit lower early next week and probably start to get a bounce, kind of like how we did back over here on May 20th. I'm not expecting the market to just waterfall off and just crash, okay? So I'm gonna get rid of this, that lower high, that lower high. I'm also gonna get rid of that. So what I'm kind of expecting here on the market is one of 2 things. I do think we'll probably just break lower a little bit earlier next week. I would expect the market to kind of just chop sideways in here and then eventually break down. I do expect that to probably happen. I don't know the timeline of this happening, but I would expect the market's going to get choppy in here. A lot of people are not going to give up and try to buy this dip as much as they can. So maybe 2-3 weeks, maybe a month, I don't know, but this was not good for the market health at all. The other possible scenario is we could definitely see where we just open higher on Monday and push higher. This was a lot of people trying to front run what they think the Fed is going to do, right? So Thursday, people, got in bearish, they sold down the market. And then the inflation data came out, and the inflation data was bad. We'll go over that here in just a second. But the inflation data was bad, so the market opened down, and now people are calling for a 75 basis point increase. Maybe not Wednesday, but going forward. Now, I'm going to tell you why I think that might be wrong. It might be a little too pessimistic, okay? Because if we get to Wednesday and the Fed comes out and raises 50 basis points and says, no, we're not really going to worry about raising to 75 basis points anytime soon, the market will scream higher, okay? Now, here's why I think they will not raise to 75 basis points. So there is an article here on Finance Yahoo. I will leave the link of this down in the description below, but feel free to grab it and read it if you want to read it. But basically, I want to look at is this chart. Now, I'll zoom in here a little bit so we can make this chart a little bit bigger. But the headline inflation data was these bars, okay? Now, this is the estimates. I don't know why they put the estimates in here, because this article actually came out after the news was released. I don't know why they couldn't just update this. But the headline estimate takes into account basically all products for inflation, okay? And they were estimating 8.3%. It wound up coming in at 8.6%, okay? So that is gonna be the bars, okay, that you see here. The line that you see here, this is the core estimate. This came in at 6%. They were estimating 5.9%. So it was roughly flat. It came in roughly as they expected. It was a little bit high. And the areas that was a little bit high was shelter, which basically just takes into account rents and home purchases and that kind of stuff. You know, how fast rent is going up. Now, what is excluded on the core estimate compared to the headline estimate is energy and food, because those are two volatile inflationary metrics that the Fed really can't do anything about, okay? So if you read down through this article, they do talk about energy and food is going to be excluded from that. And the three main things were shelter, food, and gas. So shelter, obviously I've already said, was the big one that kind of impacted the core inflation, okay? So with core inflation excluding food and energy costs, that's why we see a decrease here. The main two components that we are seeing inflation so far in the economy right now is obviously energy and food. So if you drive a car, I know you know this, gas is more expensive. This is what's making up a big part of the inflation. And the biggest reason why this is excluded from the core inflationary number is because the Fed cannot do anything to counteract that inflationary metric, okay? The thing that the Fed can do is raise the Fed funds rate, which then people that lend out money to home buyers, car purchases, people trying to buy furniture, any kind of big dollar item that you might use debt for or credit for, the Fed can help lower that demand, which lowers the inflation rate, because they can make the cost of borrowing more expensive, okay? So if they raise the interest rates, then your loan that you go out and buy a house or a car or furniture is going to be more expensive. So therefore the price that you put up isn't going to be as much. Maybe you don't go for the $1,000 furniture, maybe you go for the $800 furniture. You know, those kinds of trade-offs start to happen in the economy. So as we can see here on this line, for the core inflationary number, it is trending down and in the direction they want it to go. So I don't think the Fed will come out Wednesday and said, hey, you know, in the future we're going to raise interest rates by 0.75%. I would expect them to come out and say we are going to raise 50 basis points, and we are seeing lower demand in the areas that we can impact. So there's no need for us to then raise interest rates by another 75 basis points, especially when the economy is already tough with the higher inflation from energies and food. Why would you raise costs even more on things if you don't need to? They are seeing some contractions in the areas that they can help mitigate inflation and bring that down. But the areas outside of their control is where you're seeing a huge part of inflation that they really can't do anything about. So they're not gonna try and just crush the economy and the market by raising rates higher than what needs to be, especially with people already struggling with these high gas prices that we're seeing. Okay, so you can see how much we have deviated from the trend, right? So core and headline should pretty much move together. They pretty much do, but man, over the past few months, they have really deviated as we've seen energy prices and food prices continue to keep the total inflation higher, but core inflation is actually coming down. So this is a narrative that I think a lot of people on Wall Street are kind of missing, or they're playing a trick, okay? So if we go back to the charts, this is why I think this might be a fake out, potentially, okay? We're gonna see what happens on Monday, but the selling that we just saw come in at the end of the day on Friday is not good. The gap down is not good. I'm gonna say there's a lot of things that are not good about this, but we did just come back into this trend line. We did just sell out pretty hard. It might depend heavily on what happens on Monday. If Monday we open up and trade higher, it might have been a trap. Wall Street knows the difference between core inflation and total inflation. Okay, these are smart guys. like they don't need my video on YouTube telling what inflation's about. They know what inflation is. There is no reason for the Fed to come out and raise 75 basis points. It's just going to make things worse. Now on a weekly, this is, by the way, really bad. If you look at this on a weekly, man, look at that. We have an evening star reversal pattern on a weekly. Now these are pretty rare, but the fact that these are long legged bullish and bearish candles on the ends, man, that is really, really a bad pattern to see if you're trying to be a bullish in this market. But I just don't like how extended to the downside the market is. If we do get some sideways action, I don't mind getting bearish. Obviously, a lot of you guys do know I do expect us to get down to probably around the 320 area on the SPY before we probably bottom out. If we do just start selling down, expect us to probably get to this area, which is around 360. So I'll go ahead and put a line there, probably just around this area, because that's where this top was, and it just kind of makes sense. We'd go down 25% roughly from the all-time high, and the market would probably look to bounce, consolidate there before potentially pushing back down to about the 320 area or so. And this is the area that I really would like to see us hit. This 340, which was the pre-COVID all-time high. We'll probably get back there. We might go a little bit below it. I wouldn't imagine we get much below this 320 area, and that will probably be where I will be dipping in somewhere in this area with some long-term cash positions. I'll be getting back in on the long side. So back to the daily picture, okay? So if this was a fake out, expect Wall Street on Monday to come in and buy it up. And then the market will probably sit there for most of Tuesday. Probably not going to do much on Tuesday. Probably not going to do anything really the first half of the day on Wednesday. And then Wednesday afternoon, when the Fed comes out, that will be 2 o'clock East Coast. So whatever the Fed comes out and does, expect the market to move from then. And if they do say, hey, no, we're doing 50 basis points, we don't see the need to raise it to 75 basis points anytime soon. The things that we can impact, well, they are trending in the right direction as far as inflation. So expect, if that is the narrative that comes out of it, expect the market to probably rip higher, very strong, and we'll probably just go right through this zone. If there's any kind of waffling that goes on, expect that to just continue over the next few weeks. Probably just this zone from maybe 380 to 400. We probably just go sideways, chop around in here, and then eventually, kind of like this pattern, we'll just eventually just slowly break down and just start selling down. But I think getting bearish here is pretty tough. I think that's pretty extended. It also could be a huge trap. A lot of people are going to say 75 basis points probably coming from the Fed. I don't think so. I don't see it, because the things that they can impact, they are impacting them in the correct direction. The real issue is energy, okay? And if you want to blame anybody, you could probably blame Russia and Putin, okay? With the war in Ukraine, that has made supply chains for the oil and gas industry much more expensive and less optimized, okay? So when Russia invaded Ukraine, what wound up happening shortly thereafter was sanctions came. We saw sanctions from the US, and we saw sanctions from Europe, and Europe has a hard time kind of weaning itself off of Russian energy products, Russian energy supply, because they basically their neighbor. It's very cheap logistically to go to Russia to bring in the energy supply that you need. So when all these sanctions have happened, now you have to completely disrupt your entire supply chain, which is hugely optimized. And I know a lot about that because I spent my time in an oil and gas company working in optimization departments, what is considered in the supply chain. It is a lot. It's a lot of effort. So when things happen on short notice like this, and you got to make huge changes, well, first off, now you got to find a crude oil, and they're not even all the same. There's over hundreds of different types of crude oil out there, and now you got to find, certain crude oils that fit your refining capabilities that meet your demand. In Europe, they have a lot of diesel demand. Here in the US, we have a lot of gasoline demand. So there was a lot that kind of goes along with the supply chain. So I think in the near term, if you're really hoping for some relief here in the near term, you're basically hoping that Russia and Ukraine can find some form of peace, and that can hopefully be the end of it. And that's going to lead me to another point real quick. If you hear anything about Russia and Ukraine peace talks expect the market to explode higher because of what we just talked about, energy. The energy inflation, the energy supply chain, a lot of that will be alleviated from the peace that will come and the restrictions that will be lifted from Russia. I would imagine there will be some kind of collective deal if Russia and Ukraine kind of made peace, that they would say, hey, US and Europe, we want y'all to buy our products again, that kind of thing. You can definitely see that would impact the market in a positive way, as it alleviate a lot of pressure of inflation, costs, optimization. There's just a lot of things that kind of just go along with that. So if you're hoping for anything on the short term, that's what you're hoping for, but I wouldn't count on it. Okay, so the two things I think what will happen, shop in here sideways, or we just open up, start trading higher, wait for Fed, and then probably push higher, because a lot of people talk about 75 basis points. I don't think 75 basis points happens. They're going to say that they're doing their job as far as controlling the inflation that they can control. They're just seeing a lot of inflation like we are from energy prices, food prices, and that's a lot of stuff just outside of their control, okay? Now, I don't think we're just going to waterfall off here. I think a lot of the market's going to be pretty quiet early next week, as they're just going to wait for the Fed. We're just going to wait for the Fed. Not much going on. Just wait for the Fed, see what they do. But if you do get strong buying on Monday, I would definitely look for potentially the bullish play, but I can understand just waiting for the Fed, as that could be a huge risk that nobody really needs to take at this point in time. But if we get halfway into this channel area that we were in for the past week and a half, if we get above that 412 area, I would expect the market to really start pushing a lot higher and probably make a run up into this zone. But as for now, it's really just kind of wait and see what happens next week. The weekly chart definitely does not look good. We'll just have to see how it goes. But if we get either one of these type patterns to set up, then I'll be looking to set up some bearish positions, but I'm not going to take bearish positions right now. If we do wind up just breaking down, I would definitely be looking for the retest all the way back up into 400. It's going to try and fill this gap. So if we do break down, that's what I will be looking for. I'm just not going to play it bearish, as I just think the market's just expecting unrealistic things from the Fed that they can't control. So really, I just kind of want to give you a little overview of what's going on with the market, what they're watching, what's kind of coming up this next week with important Fed talk and that kind of stuff. It really just kind of give you a little heads up as to what impacted the market and what you can expect to impact the market going forward. Inflation's here, and it's not going away anytime soon, but they're hoping the rate of inflation will continue to decrease, okay? That is one of the things that they are really hoping for, is the rate of inflation to decrease. I wanted to get to more stuff this week, but Thursday and Friday kind of mixed up my plans for what I wanted to cover for this week, but hopefully you have a good weekend and stay cool out there, okay? Alrighty, take care, Alpha Hunters.